Aloha, everyone, and welcome to Java. Thank you for joining me. This is Friday, and it's the 1st of September 2023. We've got quite a few things going on today. If there's anything in the content that you like, please do. We need to get this one out and share it. I've got something that I'd like to go over with you. You may need to take action today. Share this with your friends if you agree with what is going on here. It's some very important things I'm going to bring up and go through. I don't like to waste my time or yours, so let's get into this. So first, we are looking at the MMRI, which is my favorite conglomerated risk indicator for the markets. It's come down a bit, kind of held on since yesterday, but we are still clearly in high territory. Now, moving into September and October are generally high-risk months for equities, but we've got some other things we're going through. So we will continue to keep our eye on the elements, which are the 10-year yield, which came up yesterday at 4.11, hasn't hit the 4.3 level again yet. The dollar gained a bit of strength, and it's kind of in an area where we're watching which direction it heads. Could have large effect on the markets. If it gets too much stronger, it will bring equity prices, stock prices down. So within this, we are watching gold kind of came up yesterday. Oil is the real story, as we knew it would climb up to 84.57 per barrel. And that is going to continue to rise in expectation. May have a short-term pullback because nothing goes straight up, but we've still got some serious supply constraints. So what are we expecting today in the regular markets? Well, we're watching the calendar, and we've got non-farm payrolls are expected. We're going to watch this because if jobs are slowing, if jobs slow down, the market will take that as positive. So bad news would be good news because it's an indicator that the Federal Reserve will stop their rate hikes and will start easing. Some things start cutting. I don't think so. We don't have rate cuts in the future here anytime soon. But we will be watching this data coming out for the employment rate mostly, and then also manufacturing and construction spending. We get to hear from Loretta Mester, the head demon herself, and we'll see what she's got to say. Pretty sure she's going to bolster the need to hike rates at least one more time through the end of this year is my personal expectation. It looks at the moment as markets are pricing this out of a possibility. And I disagree with it, but that's just my take. With oil, we're looking at it driven higher by tight supply expectations. This is due to several factors, not just regular tight supply as in it's not being produced, but also the supply factors and delivery factors such as the Panama Canal, still an issue, still backed up. They're saying it's because of the drought, but they've got limitations on how many pass through. We've also got several countries still sanctioned. Iran, we're still getting oil from Iran and allowing them to pass through to China. We've got the basically uprisals happening in South Africa, and that's bringing a little more to light on that. So let's move on. In the economy, we're getting some disturbing news. We knew this was happening. So the New York Fed just reported officially credit card auto loan delinquency rates now higher than before the pandemic. Now, we've got student loans that have not been paid for almost 3 years coming due this month as well. We've also got in the headlines Visa and MasterCard are set to hike the credit card fees. So while this is on the merchant side, shop side, they always pass that cost on. They are not going to pay that cost. They must pass it on to you as business. Okay, so you will be paying that. All of these stories coming together and they're all coming out at the same time. Part of this is constructed. So Americans are falling behind in the credit card and loan debt. We knew this, just reporting. Struggling U.S. households are maxing out their credit cards. We know this because they're trying to buy their foods and goods. They don't make money. They think it's going to be a short-term gap until they're either making more money or the Federal Reserve starts easing again. And I don't think that's going to happen soon enough. So we've got the numbers. 61% of Americans living paycheck to paycheck. This was a report put out by the Lending Club. and that even those that are earning over six figures, $100,000 a year, are struggling. And 4 in 10 are saying that after their bills, they have no money left at the end of the month in order to save. So we're still in an inflationary environment. This is only going to get worse. So this is a short chart that I found where Americans' money goes each month. So their median pay monthly of what they take home out of $4,766 per month, they're spending between their rent, food and groceries, their gas and their commuting, and then they also put healthcare. So that monthly total they're estimating around $3,550. And my point is this: where do they cut? We're also getting reports that Americans are beginning to skip meals. This is a huge danger sign. So along with this, we get to hear from the leader of the free world as it is. And the White House is calling on Congress to pass short-term spending measure to prevent a shutdown. So if this sounds familiar, it's because we just went through this. So Congress must pass funding bill before the end of September to avoid another government shutdown. So they have put this $40 billion request out. $24 billion goes to Ukraine and the war, funding them. 1.4 to nutritional programs in the United States, and 1.9 to refugee resettlement. So this just shows exactly what this administration thinks of us, giving 40 billion to a war. I'm sorry, 40 billion requested, 24 billion to a war. Only 1.4 to feed the people that are beginning to starve, and 1.9 to refugee resettlement. And what does he have to say? This quote: "There's still some deniers out there in terms of whether or not climate change has had anything to do with any of this, and we're going to need a whole hell of a lot more money." My apologies on the language, but that's his quote. And where does that money come from? Well, taxation. So squeezing the middle class. Again, this is incredibly inflationary, and people that can't afford it as it is are going to be forced to pay this. They don't ask on inflation. You don't vote on it. They just make it happen. Stories for banks. I need to cool off a little bit about this, so I don't mean to get so upset about it, but it is to me. So, on banks, in wake of Credit Suisse, Switzerland is told to better prepare for bank failure. Well, that's kind of like a sharp stick in the eye, seeing that they're regulating them. This happens, and there's more to come. They're basically admitting it. So, we've got also the IMF said they see interest rates remaining high for quite some time. They're following in this narrative. I don't think the Fed is going to start easing anytime soon. So, this other one is about the US dollar striking back. What's next after August? We're in a race to the bottom for the currency wars. If you're new here, I'll go more into depth on this later, but basically, it adjusts how much we can spend in each other's goods and the trade. So, we've got more. This is my high story that I want passed on. There are several areas. When you go to an ATM, it will give you this message: cash currently unavailable at this ATM. So this is in the United States. I don't know where it is other places, but we are expecting holiday on Monday. So if you don't have cash for your current expenses or something to hold you through for the next while, in case they close for at least a couple of weeks, get your cash out of the bank. More and more of this is coming up, reporting more and more letters from banks halting their activities for this week. As I said, this is Friday. Banks are open today. I do not know if they will be open this next week. Maybe this is nothing. I just want you to be prepared just in case. Just in case. Real estate. U.S. home cash out refinancing falls to the lowest since 2000 after Fed hikes because mortgage rates are at the highest. Also saying millennials struggling to buy homes. Conditions have changed drastically. Well, we're going to see the shift. They just want to wait. America's zombie foreclosures are beginning to build. And when there are going to be some forced sales because divorce, death, and taxes still happens. And I think that this will switch, but you're not meant to own a home. You're meant to own nothing and be happy. Okay, on our trade front, China chip maker says it's helping replace sanction tools rapidly. So the United States put chips on a banned list, and now they are just making different chips. We went over this microchips that kind of get around that. In the meantime, Huawei's mystery phone, which utilizes these chips, are showing speeds as fast as Apple. They're going to be a huge competitor, produced from within, and this could be huge. So keep an eye on this. They do keep the 5G, they are monitoring. So that's a huge story in itself. In the meantime, United States manufacturing downturn is saying this story deepens as production drops among the fastest on record. This is our hope of getting out of this recession, and manufacturing is going down. This is another huge issue. Going on, I'm just going to lightly touch lava updates because this is getting a bit long. But we've got the new CDC director urging COVID-19 booster as cases increase. Well, these are also the government is paying for these boosters. So this is also tremendously inflationary to go into our costs. Not only that, but they want to inject us with poisons, feed us poisonous food, and keep control. Got proof of these things, not just saying this mildly. Go into this more a little bit later. So the funding they're looking, this wasn't even included in that $40 billion that they're asking for. A couple other short stories I really want to hit on. Transgenics contaminate a large portion of Brazil's traditional corn. So, as we saw yesterday, the United States is losing in the corn front of production. So, if we start eating this Brazilian corn, what's going to happen? Okay, another story is the Taliban. Everybody knows what happened there in Afghanistan. Now they're signing mining contracts for all of the minerals we left behind, including the equipment, and not just the United States, but Russia as well. We've kind of funded the Taliban to be in a good position. Maybe they'll be our future trading partner. So we've got two more stories tying into each other, talking about biometrics and how they can change the way that we pay online and in stores. I've been kind of touching on this before, that we are shifting into this direction, and also that it's tied in 23andMe stock rallying after the genetics company gets the okay to report cancer risks. They start tying into your health data. This is a huge security issue, and I will go into this more later. But I've got to let you go for now. I wish you all a green trading day, just a wonderful day in general. We can get through this. We're going to stick together, and our community will make the difference. So until I speak with you again, my friends, stay free.